There is no property boom coming in 2023. If you think that there's going to be a property boom in 2023, I think there's a few things that you probably need to consider before you go out and buy a major asset like a commercial or residential property. My name is PJ Patterson. I'm the founder and director of Intrepid Wealth, and I have a pretty contrary opinion about purchasing property in 2023, and in fact, even in 2024. Why do I have this opinion? Well, first of all, interest rates are rising, and despite what a lot of people are out there saying right now, particularly property spruikers, that high interest rates don't crash property markets, well, they might not crash them, but they certainly don't make them go up. In fact, the biggest driver of increasing asset prices, in particular commercial and residential real estate, is declining interest rates. And the last time I checked, interest rates weren't going down. In fact, interest rates are probably going to continue to rise through 2023. And this, of course, will be dependent on what happens with inflation. But even if the central bank in Australia signals that they're going to stop raising interest rates, that's not a rate cut. The only thing that's going to drive property, commercial, and residential real estate prices higher is when interest rates start to be cut. Interest rates are not going to be cut anytime soon. It's very likely that we'll see interest rates continue to rise through 2023 and probably go on hold through late 2023, early 2024, and maybe early-ish 24, we might see the RBA start to talk about cutting rates. But the question really is, even if they start to cut rates, how much are they going to cut? And from what level? So think about this. It's very likely that the RBA is going to continue raising interest rates through 2023. And we could see the cash rate get up to 5% by the end of this year. It's possible. Even if it was 4.5% to 5%, that's very expensive money compared to 0% interest rates, which is what we had over the last couple of years. So the question I've got is, even when the RBA begins to cut interest rates, from what level are they going to be cut, and how much will they cut? Here at Intrepid Wealth, we have the view that the global cost of money has, the regime of it has changed. In other words, we're not going to see these zero interest rate policies and really low interest rates probably for a very long time. And in fact, central banks are so concerned right now about inflation that they're going to keep raising interest rates, which is going to continue to impact the ability to borrow money and continue to shrink the money supply, which of course is going to continue to drive asset prices down. And when central banks actually start to cut rates, they're going to be cutting rates from a much higher level. So whilst that'll be nice to get a rate cut, it's not really going to have a massive impact on the property market. Now, the good news is that there are plenty of places for you to allocate capital outside of the property market. And I think property as a whole is a very risky asset class. And I know a lot of people are going to disagree with that it isn't risky, but there has been a lot of risk introduced into the property market and the property regime over the last several years that I don't think a lot of people are actually accounting for. If any of this sounds interesting or intriguing to you, and you'd like to have a conversation with me or one of my team here at Intrepid Wealth about your property portfolio, how to reposition that to actually invest in things that will give you positive cash flow from day one, and a lot of it, or other ways to diversify your portfolio, please click on the link below, give us your details. We'll be happy to reach out and schedule an appointment to have that conversation.